This is why I'm happy that it's a Standard Chartered Bank that's championing this conversation on the fact that investment options still exist.
Absolutely.
Thank you for hosting all of us here and for making this live stream possible. Now, soon, or next, actually, we're going to be talking to a gentleman who likes to take risk. Now, if you are risk averse and you don't like to go for investment options that, present a high chance of loss, so you go for the ones with very limited chances of loss, then you're like me. But this gentleman we're going to talk to next, in his actual life, he likes to jump off airplanes. That should tell you that his tolerance for risk is very high. So if you have any questions about risk, he'll answer them. Put all your questions in the comments below. Andy will join us next. Stay tuned. All right, we're still live. This is a Standard Chartered live stream on the topic investment options still exist. And it's not a topic, it's a conversation that we ought to have, and we're happy to have here at Standard Chartered Bank because it's your #1 bank for growing and preserving your wealth. So, for my risk-averse friends, this conversation is for us. Andy,
Hi, now.
you like to go bungee jumping?
Yes, now.
Have you gone skydiving?
Not yet, but
What
I'm looking forward to it
waiting for?
very soon.
Well, I'll tell you, I've gone skydiving, and it's
Okay.
a fantastic experience.
And you're risk averse.
And I'm risk averse, yes, with my money, because that's harder to get.
Well,
So,
true.
let's talk about investments now. When we say investments, some people don't understand. So take us from the very beginning. At which age should I start thinking about the word investment, and what does it mean?
Okay. Thank you, now. Very interesting question, because it's said a lot. There's this misconception that when it comes to investments, you need to save for a while, get a big lump sum of money before you look at investment. But if you ask me, invest like yesterday. There's no time to say, I'm waiting to invest.
Okay.
Looking at the markets, it's quite important for us to look at investing and investing now. Now, when it comes to that, the paramount thing is to understand, as an investor, what your risk appetite is. As we've mentioned, I'm a risk taker, right? I understand myself. But as an investor, you need to understand what your risk appetite is. And at Standard Chartered Bank, will help you discover that. And also understand the purpose and the tenor, how long you actually want to invest. Because all these will come into play in terms of selecting what investment vehicle or vehicles that we want to propose to you to grow your wealth. Now,
Okay.
most of the time, you realize that there's a disconnect between the two. But it's important that the two are married. So therefore, once that is determined, I believe you should be able to start investing. Now, Standard Chartered Bank, as I mentioned, we are big on your risk profile. We are big on letting you understand the ins and outs of investments. We have quite a number of them. And you said I should break it down and make it simple. I'll try my best.
Okay.
So we can look at it from a local and offshore perspective. Locally, we have treasury bills, which provide a decent return in terms of short-term investments in cities. And then offshore, we have two categories, bonds and mutual funds. Now, the bonds, you can break it into three different types. We have the sovereign bonds, so you invest in US governments, Canadian governments, UK governments.
Okay, when you say you invest in these governments, what does it mean? You take my money and go and give it to them?
Yes, so you look at it like you are lending money to these entities.
Well, I need to have a lot of money to be able to lend to these entities.
Actually not. I'll tell you some more.
Okay.
So again, there are different types. So we look at the sovereigns, then we look at corporations. So these are big companies which have going concern, have proven track record of performance, and most importantly, paying their debt.
Okay.
Right? And then you have the supranationals. These supranationals are essentially regional, big corporations, also banks, that also will show you that they can pay you on time. Now, all these investments are investment grade. When I say investment grade, very simply put, they've shown going concern, they've shown a track record of performance, and looking into the future, they've been rated by the same credit agencies that we know, Standard & Poor's, Fitch, Moody's, just to mention a few. And so they've shown track record to pay. That's the most important thing for us as investors, to be certain that our monies will be given back to us as and when we need them. Then we have the mutual funds. Now, the mutual funds do a very important thing in your investment portfolio. They diversify your portfolio. So as it says, mutual funds. So it's a group of funds. So basically think about it like a basket with colored eggs, right? And those colored eggs represent various companies, various shares of different companies, all in a fund. Now, we all know don't put all your eggs in one basket, right? And so therefore, what the mutual fund is doing is that it's spreading the risk over different companies. And so we all know the market goes up and down.
Yep,
and so
does.
In the case we have a downward trend, you realize that maybe one or two companies will not perform so well in your fund, but the rest may be doing better because it's not only invested in only one sector. There are different sectors, pharmaceuticals, energy, AI, which is now big, and all these are put in the fund. Now, the fund affords you affordability. So just to mention, with $100 or $1,000, you can enter into a mutual fund and gain returns on a monthly basis also.
So if I give you my $1,000 and you invest in a mutual fund, every month I'll get some cash back.
Definitely.
Can you roll over this cash back or?
Wonderful. Now you're an expert.
Am I?
I'm telling you. In this, the main thing is a compounding interest. So again, our trusted advisors will be ready to help you reinvest your proceeds. And that's us helping you grow your wealth. So you realize that with time, you are just rolling over your return, and your small amount of money that you used to start grows big.
Okay. Now, you've spoken quite a bit about offshore investments. Let's talk about the local ones a little more.
Sure.
So you mentioned treasury bills.
Correct.
So for a newbie who's never invested, what are treasury bills, and is it a good option for a new investor?
Definitely. So treasury bills are the cornerstone of every financial market.
Okay.
In Ghana, again, treasury bills have shown that tried it, they've stood the test of time. Now, a treasury bill is a discount instrument. What that means, it sounds technical, but all that means is that if you're investing 1,000 cedis right now, what happens is that instead of earning your interest at the end of 91 days, because normally 91 days or 182 days, 6 months, you get your interest upfront. So that's even perfect. So what happens is your account is debited less the interest. So if the interest you're going to earn is 100 cedis, for example, on your 1,000 cedis, that 100 cedis is left in your account and you are debited 900 cedis. Come maturity, you'll be giving back that 1,000 cedis. So that affords you that opportunity to do something with the interest, maybe reinvest it if you want. But certainly, a T-bill is a right place to start for somebody who is risk averse.
Okay.
Yeah.
And for someone who's not risk averse, so a risk taker like you, new investor, what should they go for?
Another wonderful question now. Diversification is key. So for someone who is savvy, and because the savviness comes with the risk taking, because you know what you're doing, we always advise for you to spread your funds. So instead of investing only in T-bills, we will advise you to do some T-bills, do some bonds, do some mutual funds. Now, we are all different. So depending on what you want to do, you may skew it a bit more to either more on T-bill or more on the bonds, depending on what you want to do. But the T-bill is certainly very good because it gives you liquidity in CD. So you get cash flowing every 6 months or every 3 months.
What's the minimum amount I can invest in
Any
T-bills?
amount. It's our own government of Ghana.
So 100 Ghana cedis.
You can enter into it.
You'll take it.
Well, let's do it like 1,000 cedis.
We
We
should
can
start
start
from
with
there.
that. Yes,
All right. That's great. So this is good advice for new investors. Now, for investors who have not had good investment experience in whatever investments they have chosen and want to start over, would you advise them like a newbie? Or do you still need to do an assessment of their risk, whether they are, risk takers or risk averse?
Certainly. See, now, the investment journey, your risk profile changes as you go along.
Okay.
And so, yes, sometimes you can become risk averse based on an experience, like you've mentioned, a very bad experience. So then suddenly you are not open to any type of investment. So we definitely, before we start any form of investment conversation with you, the first thing we do is to assess your risk
Assess
appetite.
my risk.
Your risk appetite.
Okay, can you assess my risk?
I need to ask you a few questions.
Yeah,
now.
ask me a few questions.
So, one, your disposable income.
How much do I make?
How much of it are you ready to put into an investment? If you're putting all of it, that's a red flag.
Okay, so that
That's
makes
one.
me a risk taker.
No, that doesn't make you a risk taker.
Oh.
It just gives us the view on how much you are ready to put aside.
Okay.
Your age is also factored in.
So 50% of
50%
my
is a
disposable
good
income.
start. So we're starting from there.
Okay.
We check your age. Your age will also inform us what type of investments that
I'm
we can do.
35.
You're 35.
Yeah.
Beautiful. So now we are building a wonderful portfolio for you.
Okay.
So now I'll say that let's start with a bit of T-bills.
Okay.
Now, when we finish with that, depending on the amount you want to invest, we can do a bit of mutual funds. Now, it may interest you to know now, the mutual funds, we have some that every month you can contribute toward.
Okay.
So every month you can put aside some amount of money toward your mutual fund. So
Okay.
it's paying you interest every month, and you're also contributing every month. So now you see how it works. Then we build a mechanism for you to generate more money and basically expand your wealth.
Okay. Do I stand the chance to lose anything at all in investment?
Now, there's no investment that's risk-free. Every investment comes with a form of risk. Now, what we do as Standard Chartered is to ensure that you understand the return and the risk, and it's a fair balance of it. Right?
Okay.
Like, I'm a risk taker, right? So now I will go for something, and return comes with higher risk, higher return, right? But again, depends on you as an investor. That's key for us. You're in the middle of it all.
Aside my risk tolerance, do you pay attention to what's happening in the market, on the market? So if I'm a risk taker and I want to enter this, whichever fund, say mutual funds, and you know that mutual funds aren't so great right now, would you advise me against it, or my risk appetite determines the sort of investment I take?
Very good question now. Now, so we mentioned we've been in the business for over 125 years. We've been doing this for quite
a long
while.
time.
And so I'll brag a bit to say we know exactly what we're doing. And it's key when it comes to investment. Knowledge is power. And so therefore, we're consistently on the market. Our analysts, our advisors, wealth advisors are consistently on the market getting information as to where we are going, what the possibilities are, what the opportunities and risks are. And we'll highlight that to you as an investor before we go into any form of investments.
All right, there's a question here on our live stream for you I'd like to ask you. This one says, now we've heard stories about geopolitical uncertainties and the implication for both big and minor investors. But how can investing help individuals safeguard their hard-earned money during turbulent times?
Interesting. That's a very good question. That person really knows what they're saying. So the point is this. The fluctuations of the market is inevitable.
Okay.
Right? So when you're looking at investments, you're looking at two things: diversification and then having a long-term view.
Okay.
Diversification is what I spoke about, as just not giving you one investment to invest in, but looking at local, looking at offshore, having a nice basket of different types of investments. So therefore, when something's happening somewhere in the world, it will affect, yes, but not fully. Right? So
Okay.
that cushions you. And then also the long-term view. Example, if you're 35, we take a mutual fund. You have a long-term view, maybe retirement or maybe some form of education for your kids or yourself. The mutual funds will afford you that long-term because most of them don't have maturity dates. And so over a long term, going through the various peaks and troughs of the financial markets, you realize that you will be coming out in the money,
All right.
i.e. making more money.
Thank you, Andy.
You're welcome.
I love the way you answered all the questions with a lot of patience and simple language so that we'll all understand.
That is what we do. We are trained to do it, and we
All
are
right.
more than happy to talk to you.
I'll give you a call when I'm next going skydiving.
Please do.
Are we doing it?
Definitely.
We are,
yeah. I'll take you
absolutely.
on. Thank you.
And that's Andy with questions about your risk tolerance. Now, our next conversation is going to be with the person we know as the go-to guy for investments because he has deep insights into products and services which will help you protect your wealth. His name is Jerry, and he's joining us right after this. Stay tuned. You're watching a live stream of a Standard Chartered conversation, reminding us that investment options still exist. We'll be right back. Would you like me to stick to the questions?
Sorry?
Would you like me to stick to the questions?
Depends on you.
All right.
But the first question is very important to me.
Okay. All right, you're welcome back. You're watching our live stream here at Standard Chartered Bank. We're talking about investment options, the fact that they still exist, and the fact that Standard Chartered Bank is the go-to bank for all your investment solutions with specialized, tailor-made for you, your unique needs. Whatever they are, Standard Chartered Bank has something for you. Now, before we went on that break, I told you that I'm going to sit with the go-to guy for investment. Now, he knows everything, and he's quite popular in the building. And so, if you do come by for any investment package or questions, please ask for Jerry. Jerry,
Hi.
how are you doing?
Great to be here with you.
Now, when I first said about the Standard Chartered Wealth Management Limited, I got curious. Like, Wealth Management Limited, so is it for rich people who are very wealthy, or what exactly do you do there?
Okay, thank you. Great question. I'll take it from a step behind.
Okay.
So over the years, we realized that our clients and Ghanaians generally were no longer very excited about deposits and withdrawal kind of banking relationship.
Okay.
Our clients wanted the kind of expertise and guidance that will help them to grow and protect their wealth. They wanted products that will allow them to diversify their investment portfolios. And so somewhere in 2012, we introduced a mutual fund proposition, offshore mutual fund proposition. And we've been running that along the line. We introduced fixed income, including government of Ghana Eurobonds and so on and so forth. And then we got to a point where we realized, given the acceptance that we received from Ghanaians and our clients in terms of our offshore investment proposition, it became necessary for us to put up a separate entity, an investment advisory subsidiary to take care of our clients' investment needs. And so that is what Standard Chartered Wealth Management is about. This subsidiary was outlawed in October 2022 with the sole purpose of providing guidance, investment advisory services to our clients. And I must say the response has been phenomenal. We've seen a lot of clients walk through our branches asking, and if you look at the theme under which we run into today's conversation, it is in direct response to the inquiries and questions that we continue to receive from Ghanaians generally as to where do we put our money, what other investment options are available. You notice post-COVID, global inflation went very high, and there were policy interventions to tackle inflation, key amongst which was raising of interest rates and so on and so forth. And so people know that with high inflation globally, the purchasing power of the deposits continue to erode. And so there's that need that urgent need to invest to grow the value of a deposit, if for nothing at all to protect against inflation. And so when they walk through our doors, they are seeking for options to invest. And one thing we can assure you of is when it comes to Standard Chartered Wealth Management, or if you walk through any of our branches, anybody we'll be speaking to is certified, professional, licensed by the Securities and Exchange Commission of Ghana to provide tailored investment advice and guide you through the journey of investing.
Now, we've heard and we've been told over and over and over again that Standard Chartered Bank is the best bank to grow your wealth and protect your wealth. I'm interested in the protect your wealth bit.
Okay.
How exactly do you help clients to protect their wealth?
Okay, look at it this way. If you were a coach of a football team.
Which one?
Any team.
Okay.
Any team.
Okay. As long as it's not Chelsea.
Well, any team. Any team at all. The primary goal of any football team is to win a match, right?
Yes.
but there is no team that is made up of only strikers, right? If you build a team made up of only strikers, yes, you could score 10 goals, but you are leaving yourself wide open for your opponent to also score goals.
Yes.
So you could score 10, but they will score 11 and you lose the match. And so every coach positions a strategy, puts a strategy in place to ensure that while there are some people who are doing the scoring, there are some midfielders who are guiding them, there are some defenders, and there is a goalkeeper to ensure that even if you score one goal, you can protect that goal and emerge a winner. And so bringing this into the conversation, investments help you to grow your wealth. That's like scoring the goals. But you also need to protect that goal in that if you invest, you grow the value of your money, and some unforeseen circumstance happens, and you have to now use all the money that you invested plus the interest to take care of that emergency. Did you go or did you come? And so we encourage our clients to, whilst investing, also take insurance policies to take care of unforeseen circumstances. And that's how we help you to protect your wealth. We also encourage you to maintain diversified portfolios, like Andy spoke about, just to ensure that you don't place all your eggs in one basket, such that even if any unforeseen circumstance compels a side of the market to go down, the other side of the market or the other side of your portfolio is likely to go up to cushion your overall investment. And so these are some of the things that we do to get our clients to protect their wealth.
Okay, and does this insurance apply to all investment options or specific ones?
Okay, so there are two distinct propositions. We have the investments, but we encourage you also to take an insurance policy, life insurance to protect your family income, for critical illness. So like I said, if you did an investment, you made your returns, and right after that, maybe you or a loved one is terribly ill and you have to use all that money to take care of their health, that will not be a good place. So we encourage you invest your money, grow the value of your money as much as you can, but have an investment, an insurance policy on the side such that
to protect you.
To protect you.
All right,
Yeah.
all right. Now, I think I might have seen the 2024 report, the Global Market Outlook report, talking about some very intriguing investment opportunities available locally and globally.
Yes.
Since you're here and you're the go-to guy for investments, can you tell us, some of these juicy opportunities that our viewers can hop on? Okay,
great. Thank you. Great question. So as Standard Chartered, we delight ourselves in research, right? We do a lot of research. We look into the global economic space, the global economic landscape, all the events that are happening, and make an assessment of what impact these events are going to have on investment. And so with these permutations, we're able to come up with certain themes and ideas for our clients to invest, right? So we point our clients to where the opportunities lie for them to invest. So at the beginning of every year, like the beginning of this year, as we did, we had an event at Marriott Hotel, invited all our clients and non-clients. We showcased our global market outlook to them. We pointed them to where the opportunities were. We highlighted the need for them to invest in top quality, top highly rated bonds, AAA rated, AA rated, single A rated bonds, investment grade bonds. We encourage them to seek exposure to or invest in US equities, specifically tech equities, because of the artificial intelligence revolution that is going on. And I'm happy to see that as many clients who listened to our advice and who invested in some of these ideas are very happy. If you look at the indices, you will notice that US tech stocks are up more than 13% year to date. The bond prices have started rising as there are expectations that interest rates will begin to drop any moment from now. And so clients who bought some of these ideas from the beginning of the year, and some of them, I believe, are listening to us, they will attest to the fact that some of our strategies are working very well for them. And may I use this opportunity to also highlight that in July, we'll be having the H2, the second half version of our Global Market Outlook. Our Chief Investment Officer for Africa and Middle East will be in town, and we'll be inviting our clients and having a conversation. So if you have any questions or you want to listen a bit more closely to what we have on offer, it would be a good idea to listen up for what dates we'll be announcing. So some of our viewers are feeling a little left out.
Yeah, so you're talking about all these juicy opportunities to protect your wealth, create and protect your wealth. For folks who haven't started at all and they're listening to us now, they've heard Andy talk about starting off with, low risk, like treasury bills and so on. Now, after listening to you, I'm beginning to lean towards other options.
Mm-hmm.
Now, for people watching us who have not started at all, how do they start? Where should they come to? Should they call you? Should they come to the banking hall? Should they go online? How do you begin?
Okay, good. Before I get there, I'd like to highlight something very intriguing, right? So I spoke about tech as one of the areas we are very positive on and which has delivered more than 13% year to date for people who invested in tech. And I can see you holding a phone that looks like an iPhone, right?
Yes, it is.
You probably have an iCloud account that you're paying a lot of money every month to
reluctantly,
so that you can keep your beautiful pictures and you have enough space for your videos and everything. You probably have Netflix. Maybe you forgot the password, but your nanny remembers because when you're not home, she watches it. So we make use of some of these products every day: phones, cars, clothing. But what we don't pay attention to is the fact that by our consumption of this product, some people are getting super rich. Some people are investing in Apple, people are investing in Google, Netflix, Amazon, and so on and so forth. And we use these things every day. And by our usage, our consumption, some people are getting fabulously rich. Now, the question now is, how much money have you made from an Apple share or an Apple bond since you started using iPhone?
$0.
So that is where the conversation begins. So for everybody who is listening to us and who probably you're watching on a Samsung phone, an Apple phone, on a TV, or whatever it is you're using, you are able to hear us, and your ability to hear us is making some people make money. And so walk quickly to any Standard Chartered Bank branch. The first step is to have an account set up for you. Once you have an account set up, we have hundreds of investment advisors, like I said, who are licensed by the Securities and Exchange Commission of Ghana to provide investment advisory and to guide you through your investment journey. And like Andy said, suitability is key to us. We don't believe that any investment is one size fits all. And so after setting up the account, somebody will engage you in a conversation to get to understand better what your investment needs are, what your the amount of risk you are willing to take in pursuit of that investment objective. And having arrived at your risk appetite, we are able to recommend suitable investments to you. All
right. Now, I don't know if I should let you go or ask you all these questions that are coming in, but we should also. Okay, let me just ask a couple more questions, and then I'll let you go. All right. I'm an eager investor. How can I get my hands on these juicy opportunities? I think you've spoken quite a bit.
Just walk to any Standard Chartered branch.
Come here.
You'll be sorted out.
Or any of the Standard Chartered branches, and you'll be sorted. This man looks like he knows exactly what he's talking about. I like it when an investor is confident in what he's saying. All right. So that's for you. Thank you so much for joining me, Jerry. If there are more questions on your presentation, we'll be sure to bring you back.
Definitely.
So you're still here with us.
I'm still around.
You're watching our live stream. We're talking about investment options. They still exist, and it's proudly brought to you by Standard Chartered Bank. This is the bank that will grow and protect your wealth with and for you, with over 120 years of experience on the market, navigating diverse markets to serve you well. Stay tuned. We'll be right back.
No?
And we're back. I see your questions and comments coming in. You are watching the live stream of Standard Chartered Bank. We're talking about investment options. They still exist, and there's one for everyone. There's one specifically tailor-made to suit your unique needs here at Standard Chartered Bank. I'm going to read some of your messages in the comments. This is a good time to ask your questions if you have any, and all your questions will be answered, hopefully. I will try. All right, so here's a question. I'm young. I just started investing. What should I do? Okay, I love this bank. It's number one in Ghana. All right, I just started working. This is from Jifa. I just started working. How much can I invest? Okay, and then very insightful session by all standards. Thank you so much. I'm going to scroll through. Some of the questions have sort of been answered already. So I'm going to scroll through and go to a question which I believe has not been fully answered. All right, here's one. I know it's great to build wealth and invest in all of that, but how secure are we in this world of uncertainty that what we have built will not be wiped off? Are there products to ensure you and make sure that your family will continue to live your best life? I beg your pardon. Should they're unfortunate occur? Well, I'll tell you what. I have the best person to answer this question seated here with me. Emmanuel.
Yes, ma'am.
You have an answer to this question, don't you?
Yes.
All right. How do we ensure
question.
that, all of our wealth is not wiped away in this world of uncertainty?
Rightly so. At Standard Chartered Bank, we actually value the financial security and safety of our clients.
Okay.
So we have carefully selected reliable insurance partners to ensure that they cover our clients and protect them from uncertainties and unexpected events. So when you are our client, what we choose to do or what we decide to do to unveil your risk situations or risk that can actually occur in your lifetime is that we take you through an insurance needs analysis. Once you go through this process, we are able to uncover your insurance needs. We have tailor-made solutions that provide a wide range of cover that hedges our clients against some of uncertainties such as death, uncertainties such as critical illness, and uncertainties such as accidents that can befall our clients. We do understand that we live in a world where we cannot tell when the next event or misfortune can occur. So at Standard Chartered, we value the time and effort we placed in selecting an investment. Due to that, we do not want a situation where clients' returns will be wiped out due to these unforeseen occurrences. So we try to ensure that we provide you with expert advice and analyze your insurance risk situation and then prescribe the right products for you. So as I was saying, we have policies that allows the client to select a sum assured, an amount that is actually unlimited, an amount the client believes is enough, is adequate to give them that financial freedom and also give that financial freedom to their loved ones in case they are no more. So if you invest with Standard Chartered, what happens is your family is assured of a certain path in their wealth growth. Your family is assured that whatever income you provide for them, in the situation where you are no more in a position to provide them with their financial needs, we fall on our products to ensure that clients are adequately covered. So in Standard Chartered, we do think so much about the kind of cover we can give to our clients, and we do take them through the process to identify their risk areas and ensure that we are able to prescribe the necessary plans and products that can help the client hedge themselves against this unforeseen and uncertainties.
Is it assured, or it depends, or it depends on the situation and other factors that the clients might have signed on to when they took on the investment policy?
Okay, so what usually happens is we try to separate the investment from
the
the
insurance.
insurance policies. However, we have insurance policies that also carry savings and investment features.
Okay.
So we have policies that provide wealth growth for clients. Typically, these same policies get to provide cover against some of the unforeseen occurrences we talked about.
Okay.
So let's take, for example, a client who has invested for 5 years is expecting that their investment will mature the next year, and unfortunately, client gets a critical illness. Do you foresee the client ending their or achieving their investment goals? Typically, it becomes a tough challenge for the clients and their loved ones, their families. With our policies, we have benefits that enables the clients to financially cater for some of the costs that can come out of these unexpected events. Costs such as emergency medical bills, costs such as funeral, costs even on the death of the parent or the family head or the income earner for the family. In that situation, the insurance policy pays lump sum to the beneficiaries of our clients. In this situation, they are hedged and they are protected. Their financial goals are met. We don't have the situation where clients and their families would have to go through challenging times in unforeseen and uncertain times.
Okay. Okay. That's about covers it. That's about covers it. Thank you so much. Let me read a couple more comments, see if there's any question for you here. All right. This is a comment on SC Mobile. He says, Senanu says, it really works. The most interesting twist to do with being able to do your investment on the SC Mobile app from the comfort of your home, wherever you are, and that's simply great. Ebenezer says, great insights, absolutely love it. Eko, watching us from Australia, says, this has been a really great show. Stanchart should do some more. All right. I think this is a good comment to end with. It's a very good comment to end with. Thank you so much, Emmanuel.
Thank you.
Thank you, Jerry. Thank you, Andy. Thank you, Setor. Thank you for tuning in and for watching this live session. This has been a conversation on investment options. They still exist, and when you come here to Standard Chartered Bank, you will be taken care of because there is an investment option specially tailor-made for everyone, considering your unique needs. So if you are a new investor, if you are an experienced investor, if you have questions about investments, walk in any day and you'll be taken care of. My name is Na Ashoko. This has been good. Until we come your way next time, have a wonderful day, and remember that investment options still exist.